Good afternoon, everyone. For those who don't know me, I'm Anders Johnson from Chief of the Innovation Section here at the OECD. I'd like to welcome, at ECE, I'm sorry, we just spoke about the OECD. I'd like to welcome everyone to this 24th episode of the Innovation Circle discussion series on SME and innovation vouchers and their potential in driving sustainable transformation, especially in the Republic of Moldova, but also, of course, in other countries in the region. And this discussion builds on and also serves as complementary capacity building to the work we have done for Moldova, including the regional innovation policy outlook and more recently the innovation for sustainable development review of Moldova and the recommendations that we have in there. We congratulate Moldova for their efforts and really look forward to supporting Moldova further, also as part of what we hope will be a second phase of this project with another review and another edition of the IPO that might start, maybe we hope, towards the end of the year. I'd like to thank also Igor Kiosa for his support, and he is our focal point at the Directorate for Research and Innovation Policy at the Ministry of Education and Research in Moldova. Now, today's topic is an innovation voucher. Innovation vouchers. Innovation vouchers are basically relatively small grants for external expertise, for collaboration, and for technical assistance that can be given to SMEs and startups for very specific projects, but that typically also give quite a bit of leeway for startups and entrepreneurs to choose exactly how to spend it within, of course, certain constraints. The advantage of this is, as we have discussed several times, innovation governance is not easy, especially these kinds of direct support. But if you have something that's relatively straightforward and unbureaucratic, and anyway not a large sum, there's a large scope for allowing for more flexibility, for trying out some exciting projects, and for not being as constrained and experimenting more, which is important also for innovation policy. It addresses the basic market failure of systemic underinvestment due to high risk, information asymmetry, cost of discovery. These are technical terms, but it basically means that there are things that entrepreneurs should be trying out, and that would be also socially beneficial if they tried out because of spillover effects, but are not because the risks are simply too high. And innovation vouchers are one of the ways in which governments can make sure that more people are trying out more ideas than otherwise would be the case, which is essential for innovation. That is the process of innovation. And it also overcomes several of the problems with this kind of public support that we have seen in several ways, make them more straightforward and do not require the same kind of controls and regulations as more substantial and also politicized investment or sector targeting and what have you. Now, I've been experimenting with AI because I realized we're very good at preaching innovation, but not very good at being innovative ourselves. So I decided to ask AI, what are some unexpected but exciting small projects that would make sense that could be funded by vouchers in Moldova? And I picked out a couple that I like just to get people thinking and maybe commenting on in the discussion. One is a food processor who collaborates with a technical university. It actually mentioned a specific technical university in the response. I just didn't copy it, on a packaging solution for an export-oriented marketing, something that helps brand and helps and also helps preserve the product. Another one is a binary cooperating with the university to optimize the fermentation process. Another is a fintech startup that works with a mathematical university to develop a micro-lending algorithm. Another is a cooperative of small farmers consulting with agronomists on precision farming techniques in irrigation. Another is a textile firm using vouchers to consult with an engineer on eco-friendly dyeing processes meeting EU regulations, which of course is very, very important and exactly the time to start thinking about this, because compliance will be essential to benefit from the EU market. So I look forward to to discussing what vouchers are, and also as concretely as possible how they could be applied in Moldova. So please come in with your ideas and discuss with our dear expert here, who is Mr. Stephen Roper, Director of the Enterprise Centre UK. Many thanks for joining us today, and many thanks for Stephen. So I'll hand over to my colleague Jakob Fexer, who will moderate. But welcome again. I look forward to the discussion.
Thanks so much, Anders, and Stephen. Welcome. I'll say a few more words about you in a second, and then you can complement. And bună ziua to Chișinău, and welcome to all our ETN members. So we have a bit of a dual purpose, and I think both are kind of novel ways of conducting this podcast. On the one hand, we're really zooming in on a very specific type of policy measure and explore how that can spur transformative innovation. And then at the same time, we're responding to a request for capacity building from one of our member states, from the Republic of Moldova, whose government is now in the process of designing and carrying out a first voucher scheme. And so we hope to combine both theory and practice with relevant insights for all the participants. And Professor Stephen Roper, hope I can say, an old friend of mine. We worked together when I was at the OECD. We actually worked together on implementing a pilot voucher scheme in Montenegro. And he's not only very, very knowledgeable, but he also has this dual background of theory. He's, as Anders mentioned, a professor at Warwick Business School, and he's also led a lot of projects focusing on innovation and business support, more than 80. So, as I was alluding to at the beginning, he has this double perspective of theory and practice. And I've always appreciated the clarity of thought and the clarity of communication of Stephen. I think that's going to be good for such a short 1 hour session together. Stephen, do you want to maybe complement a little bit about your background, and then we'll dive into some of the questions?
Yes, thanks, Jakob. Thanks, Anders. And thank you very much, everyone, for the invitation to participate in this discussion this afternoon. As Jakob said, I'm Stephen Roper. I'm Professor of Enterprise here at Warwick Business School, where I lead the UK's National Small Business Research Centre, something called the Enterprise Research Centre, Anders mentioned. And I suppose my history of vouchers goes back more than 20 years now, because I was responsible for bringing innovation vouchers to the UK a very long time ago, and setting up and running for a while the first innovation voucher scheme in the UK before it became, as a regional scheme, before it became a national policy initiative here. And the history of vouchers in the UK has waxed and waned a little bit, sometimes become more important, sometimes less. But I've retained an interest in that and worked with the OECD, as Jakob said, and World Bank a little bit in various different countries on voucher schemes, and talk a little bit about some of those later on. But also been very involved in thinking about the evaluation of a number of different sort of small business and innovation policy initiatives in different countries. So again, that sort of experience, that practical experience of trying to evaluate the impacts of different schemes, also feeds into my own thinking about vouchers and the potential value of them as part of a system of innovation support.
Thank you, Steve. Excellent. So maybe Anders gave a quick background on what voucher schemes are, but maybe you can give us your version of how you think they can be an impactful tool to spur innovation among SMEs. Maybe also tell us what voucher schemes are not, so what we should not expect from them, and maybe also clarify the difference between innovation and SME voucher schemes. I think I know the difference, but I think these terms get used interchangeably, but there is quite a distinct difference between them. And I think today we'll mostly speak about SME voucher schemes, but I think it's important from the outset to to make clear what these terms are and how they should be used. So Steve, over to you.
Okay, so thanks, Jakob. So firstly, I think it's important to say I think of voucher schemes, both growth vouchers or SME vouchers, if you prefer, and innovation vouchers as very much a sort of gateway initiative. For many firms, they're the first step into, for many small companies, they're the first step into thinking about innovation, or perhaps thinking about taking on board a serious amount of external advice which can support the growth or exporting of those companies. And we'll come back to a little bit about the differences of those different things in a moment. I think it's probably most useful to start with a couple of kind of quick examples of what voucher schemes look like internationally. Because I think that sort of helps to solidify some of the kind of concepts that we're talking about here. So let's travel first to the extreme west of Europe, and we'll go to Ireland. And let me tell you a little bit about the Enterprise Ireland voucher scheme, which has been running since I think the early noughties, probably around 2007. So this is a very well embedded scheme in Ireland. It's been used extensively by small and medium-sized enterprises. This is an innovation voucher scheme, so very much designed to support firms which are at the beginning of their innovation journey, thinking about new products, new processes, new services, but very much at the early stages. And the vouchers in Ireland, the Enterprise Ireland vouchers, are specifically designed to try to build the bridges between firms and the Irish higher education sector. Those don't need to be universities. They could be institutes of higher education in Ireland, which also could be knowledge providers for vouchers, but between a higher education institution of some sort and a firm. This is important because in the Irish context, the Irish government has invested very heavily in capability in the universities over the last 10 or 15 years, particularly since the foundation of Science Foundation Ireland. And the vouchers are intended to build a bridge between that investment in knowledge as part of the economy as a whole and the SME sector, the smaller firms sector. Typically in Ireland, SMEs are asked to match the voucher is worth €5,000, so the SME gets €5,000 from the government to go and buy services from the higher education institution. And the SME in Ireland, at least, is asked to match that with €5,000 of their own money, so they essentially buy a contract from the HEI, which is worth €10,000 of services. We'll come back to the incentive structure that builds a little bit later on. The UK scheme, which was operated by Innovate UK over some years, is very much the same. But there are one or two interesting wrinkles in the UK scheme, or there were. The first was that firms could not previously have worked with their new partner. Mm-hmm. So the UK Innovation Voucher Scheme was very much around building new partnerships, not sustaining older ones. So that's an interesting kind of design feature that you might like to think about, whether that is relevant for a Moldovan scheme a bit later on. And also in the English scheme, where the scheme was oversubscribed, vouchers were randomly allocated across those applicants. So there was no process of assessment of the applications. Firms just received their vouchers randomly by allocation. This is one way of kind of reducing the costs. But of course, it has other consequences, which we might come back to. So the Irish scheme and the UK scheme were both innovation voucher schemes, very much about university to small business collaboration. In Germany, there are schemes which are for innovation, very much the same as the UK schemes. They also use vouchers to promote digitalization, so digital adoption among small companies. There's a scheme in Singapore which is very much around similar sort of structure, but very much around sort of trying to help firms to develop capability through accessing external kind of consultancy of various different sorts. And that fits more within the growth voucher or SME voucher space. So Jakob was talking about the difference between the two. We'd think about innovation vouchers, perhaps the most common form, as being being vouchers where firms are linking to HEIs, typically higher education institutions. Growth vouchers might be linked to a broader range of knowledge providers, including potentially consultancies or marketeers, to bring in that sort of external capability into a business, but not necessarily linked to innovation. Could be around exporting, could be around marketing, could be around anything else. And there was a big scheme in the UK called Growth Vouchers, which had that sort of impetus. And then, of course, there are more specific things around design vouchers, which could be used to link to help businesses bring more design into their operations. I guess that, to go back to Anders' initial introduction, what all of this suggests is that the architecture of voucher schemes differs quite a lot. The focus of these schemes differs quite a lot, but they do provide this kind of flexible tool which can help to address weaknesses in collaboration between SMEs and other elements of the innovation system. And that, I guess, is really their key advantage, along with the fact that they're relatively cheap to operate.
Excellent, Steve. I have a few quick follow-up questions to what you said. The first one is one of practical nature. How can you find out on what basis can you determine whether firms have worked with certain service providers before? The second one, when vouchers are randomly allocated, how does that go down with the tax-paying public? And thirdly, you mentioned Ireland, you mentioned the UK, you mentioned Germany, you mentioned Singapore. You didn't mention any of the program countries of UNECE or other countries of similar development levels. And how would you explain this relatively low exposure of these countries to this type of policy measure?
Oh, so many questions, Jakob. I've forgotten the first one. What was the first one?
How can you establish a mechanism?
Okay, yes.
Yeah.
Okay. So
we'll get into the more practical building blocks of voucher schemes later, but I did want to ask this as a follow-up to what you said.
Absolutely, and it's an important question. I think in the that criteria about not having worked with partners before, it was very much in the context of the UK scheme.
Yeah.
In smaller economies, I think that's much more difficult, because very often, you will work repeatedly with the same local partners. Slightly larger economies like the UK, it's a slightly different context. I think there it relied on the business itself, the applicant for the voucher, saying that they hadn't previously worked with the existing partner. So it relied on a degree of honesty in a sense, but we'll come back to a little bit about carrots and sticks later in the discussion, I think, which might fill that out a little bit more. I think in terms of, I think I've talked largely about sort of Northern European economies in a sense, and Singapore, simply because that's my experience predominantly. I think in terms of what might explain the fact that there are probably fewer vouchers in some more transition economies, there are three things, I guess, or a couple of things that might sort of be important there. I guess the first thing is that an effective voucher scheme depends both on the demand side and the supply side. So you definitely need the firms that are keen to innovate, because they then take advantage of the vouchers, or keen to grow because they then take advantage of the kind of growth vouchers or SME vouchers. But you also need a supply side. You also need good quality knowledge suppliers who can actually service the vouchers in an effective way and help firms to actively grow and solve their technological problems. And I suppose in some areas in the transition economies, the supply side probably remains less well developed than it is in Northern European economies, particular. So that might be a little bit of a restriction in some cases. Although, I mean, I know in some of the Moldovan policy initiatives, there is this kind of strand towards internationalization and stressing international collaboration. And there might be a way of using vouchers to try and drive some of that internationalization along the way as well. The second element of it is, I said, vouchers are a gateway product. They're an entry into they're an entry point to a public support system for innovation. Very often firms will go on from a voucher to another form of public support for innovation, or R&D grant, a loan or something else. And I think you need to think about it in that sort of systemic way, rather than as a sort of isolated intervention. And it was good to see that the whole sort of support system in Moldova is being strengthened and supported. So vouchers could be a useful part of that, I think, but there's no point in doing a voucher scheme in isolation because firms will just fall out at the end and then not do have nowhere else to go. So I think it needs to be part of that sort of more systematic development. And there's a resource question, of course.
Of course.
You know, always, but that's a perennial question, and that was an issue for us, as I remember, when we were in Montenegro, because the scale of funding which was available at that point in Montenegro was not particularly great, and so there was a risk, I think, of raising firms' expectations about the availability of vouchers and then not being able to satisfy that demand when that actually emerged.
Great, Steve. We'll move on to the more operational questions. I just had one. Maybe you could very briefly mention to what evidence there is on the impact of SME or innovation voucher schemes compared to other SME or innovation financing, let's say, instruments. Just to kind of conclude on this first introductory part.
Yeah. Okay. I mean, there have been quite a number of sort of evaluations of innovation vouchers, which have suggested the sort of very positive impacts of those relative to the expenditure, and that's the key point, relative to the expenditure, because the expenditure on these schemes per intervention is relatively small. So you've had a series of evaluations in the context of Enterprise Ireland, which have sort of suggested the continuation of that scheme. The similar evidence, I think, in the Belgian case and in the UK case. And in the UK, the evidence very much suggests that innovation vouchers act as this kind of gateway. It's a sort of learning point for firms about the value of engaging with external advice and support as part of their innovation activity. And then many of the firms that get sort of regional innovation vouchers in the UK then go on to get sort of national support for higher level projects or larger R&D and grant projects. So there is definitely a knowledge benefit to the firms, but there's also this kind of learning about how you actually work with external advisors, how you actually develop a bid for an investment project, and that leads on to these larger grants and larger amounts of public support.
Excellent, great. Okay, so what would you say are some of the essential design elements of successful voucher schemes? If we now get into the practicalities, and I hope that this part is of particular relevance to our colleagues that are joining from Moldova, that are in the process of designing such a scheme.
Yeah. So I suppose the first thing to sort of take into account is that voucher schemes very much involve three parties. There's the firms on the one hand, there's the knowledge providers on the other, and there's the funders as well of the scheme. And each of those three groups wants slightly different things out of any innovation voucher scheme. I suppose the funders are always going to want additionality. So in the UK, that led them to say, well, you know, it needs to be a new partner. They also want to implement a scheme without funds going astray. So that tends to lead to rather tight eligibility conditions, and you know, some checking of applications on the way through. The UK allocation, the random allocation, occurs after firms have been deemed eligible for the scheme. It's not just a random allocation to all applicants. There is an eligibility check before that random allocation. So from the funder's point of view, those kinds of things are important. What do the knowledge providers get out of this? Well, they get a little bit of funding for sure, but it's only a small amount of funding. So you're really depending a little bit on the goodwill of the knowledge providers to engage with the companies that they're working with. And the knowledge providers typically see this, or universities very often see this, as the first step in building a relationship. And so it's important for them that there is a sort of follow-on product available and a follow-on sort of potential to do something in that relationship as the firm grows or as the innovation becomes more mature. And then there's a question about fairness here, because the knowledge providers, the universities, need to be paid fairly for their input into the into the scheme. Then it's about the firms, and I think here it's about a number of different questions. Thinking of the first thing is who do you want to target in this scheme? So when you're designing the scheme, the first question is about those clear eligibility conditions. Is it sector? Is it a size band thing? Is it a region thing? Who are the firms that you really want to target? What legal status do they need to have? Do they need to have been trading for any given number of years? Some very clear guidelines like that, and the more transparent those are, the better. The second thing is what you want to target. What is the exact purpose of the innovation voucher scheme, and how, or the growth voucher scheme, and how does that fit into the broader policy landscape and the mosaic of different schemes that you're trying to build? Where are the complementarities with the other measures that you're implementing? And that might lead you to this difference between a growth and an innovation voucher, or a design voucher, or an export voucher, however you want to define it, thinking about the kind of market failures that Anders was referring to at the beginning of the of this session. And then finally, I guess there's a question about what you want to support, and thinking about what the eligible activities are that you need to have within the vouchers. So again, the kind of eligible, you know, is it just for salaries? Because some voucher schemes would be targeted specifically at employing a graduate for a period of time. Some others would pay for all different aspects, both hardware and software aspects of innovation projects. And so that eligibility thing is important too. And then a timeline. You know, how long have firms got to actually complete the voucher project? How long can they draw down the money? So those are a few of the kind of key considerations I would have thought in terms of thinking about the design of any of these kinds of schemes.
And then I guess the essence of a good voucher scheme is to, in addition to what you said, is to strike the right balance between making it light touch, not to deter applicants, and at the same time have some kind of accountability and due diligence. And I'm thinking here, for example, about the potential of fraud in a voucher scheme, right? You're giving out public money, not too many strings attached. Maybe you could talk in a bit of detail about what kind of specific, you know, fraud prevention mechanisms you can put in place to strike that balance in the right way.
So I think the first thing here is very much about having transparent eligibility conditions. And that probably relates both to the firm itself, who would be the direct beneficiary of the voucher, but also to the knowledge provider. And it may also relate to the people who are on either side of that as the individual beneficiaries of those schemes. In some voucher schemes, for example, you're not allowed to work with family members, you know, as a sort of fraud prevention mechanism. not allowed to work with your partner as now that may not be relevant in Moldova, but that has been put into the definition of some voucher schemes. But there are also kind of carrots and sticks which can be implemented here. The kind of carrot for behaving well in voucher schemes can be the promise of future engagement, future public support for later innovation projects. So firms which establish a good track record and behave well in the voucher scheme then are allowed to go on to get other public support. The stick element of that might be that firms which are found to behave poorly in a voucher scheme might be barred from future public support for innovation or other activities, or indeed excluded potentially from future public contracts. So there are both rules that you could put in place, and also these kind of wider guidelines which can be used to try to enforce or at least regulate behavior. But of course, there's inevitably a degree of monitoring which is going to need to go on here. You need to verify the eligibility of applications. You need to verify the eligibility of the costs which are coming back potentially, and I think this is quite an important element of the overhead and management of voucher schemes, which people sometimes underestimate a little bit.
Right, and Steve, if we now turn to Moldova a bit more concretely.
Yep.
And I'll soon open up the floor to to ETIN members, but also to our Moldovan colleagues in Chisinau to ask follow-up questions. What would you say are some of the common mistakes that first-time implementers make that could be avoided?
Okay, so I think I'll talk about two, Jakob, and perhaps we'll come back to some other sort of issues a bit later on. I think the biggest challenge very often in these schemes is underestimating the amount of support which smaller companies will need in terms of defining the problem that they want to get solved with their innovation voucher. And then finding the appropriate knowledge partner. So there's a sort of definitional element to that, and a sort of brokering element to that, both of which need quite sophisticated handling very much. And the second, particularly the brokering element to this, needs quite a good detailed knowledge of who potential partners might be. So I think it's important to think quite carefully about the system administration and the overhead and that brokering element of the whole scheme, because without that it doesn't really work. And then I think maybe the second thing is to think quite carefully about the eligibility conditions. We've talked some elements of this already. Is it new partnerships or is it existing ones? What is the precise focus of this? So I think it's about definition, clarity of objectives, and then the clarity of who you want actually to be inside and outside this voucher scheme. So maybe those are the two sort of biggest challenges when you're beginning to think about these sorts of things.
Great, and then another Moldova specific question. The government of Moldova is implementing its smart specialization strategy, and it's quite a strong priority for the government to do this well and comprehensively, and they would like to combine other policy measures with that effort. What role can innovation or growth vouchers play in supporting the efforts of implementing a smart specialization strategy?
So I think vouchers are very well suited to supporting smart specialization in many ways. The first thing that we've talked about is the sort of flexibility of vouchers as a policy tool. They can be targeted very effectively at certain sectors, certain regions, certain firm size groups. And so they can play quite a critical role in sort of empowering local entrepreneurship, which is the kind of bedrock of much of the sort of smart specialization activity. They also are very important in sort of knitting together different partners and sharing knowledge between different partners. So if you think about smart specialization, a key element of that is essentially building local knowledge clusters where knowledge gets shared and used intensively by a group of organizations, firms, universities, other partners. Vouchers can be very useful in catalyzing that sort of knowledge exchange. And I remember some discussions with the World Bank about the Polish aerospace cluster and the potential value of vouchers in that cluster. Both in terms there of sort of trying to support supply chain innovation, but also trying to bring other firms into the boundaries of that cluster. So I think that's probably the key role.
Good. Great. I think that leads us nicely to now opening the floor. Igor Kioza is our main counterpart in the Republic of Moldova. Igor, maybe you want to come in briefly and introduce yourself and give a little bit of additional background of how some of these lessons learned are relevant for Moldova, and also a few more details about the timeline and the plans of your government in implementing voucher scheme. And then maybe you can also combine that with any specific issues that you would like Stephen to elaborate on, and then maybe also encourage your colleagues to come in and ask their question. If they prefer to speak in Romanian, maybe then Igor, you can facilitate the interpretation. So Igor, maybe over to you, and then I'll open the floor up to anyone who would like to come in with a comment, with a request for clarification, or any question and any other related issues.
I think he might have disconnected.
Okay, I think Igor is disconnected. Anyone else from the Republic of Moldova would like to come in, or anyone else, including my colleagues here, other ETN members? Jakob.
Yes, I have a question for Stephen regarding, do you have found some best practice or other advice to actually how to reach out to the target group? Because they are obviously distributed all over the country, and how do you reach out to the target group and get their attention to this kind of scheme?
Yeah, Jakob, it's a very interesting question. I mean, certainly in the UK and in Ireland, these schemes are so well embedded now that they're very familiar to many companies, I suppose, and as a source of sort of innovation funding. Very often, the knowledge providers will be a good source of disseminating information on these for their particular sort of regions or target groups. And then I think perhaps going through chambers of commerce or industry associations would be possibly the best route. My sense generally is that the voucher schemes are very attractive to smaller companies. They're light touch. They're fairly accessible sort of bits of additional finance. But you're absolutely right. It's all about encouraging awareness among the groups of companies that you want to get to. So there does need to be a sort of promotional element to all of these schemes.
Thanks.
Good, Len. I see that Len. Oh, sorry, Jakob, you wanted to respond. Please go ahead.
Thank you very much for that answer. And we have hands-on experience in Sweden, for example, that you can use incubators and science parks and cluster organizations as one mean to reach out to the target group. So yeah, you need to find the best means for what you're out for.
Yes, and I think that comes back to having a clear view of who your target group is, whether that's regional, sectoral, whatever, and then thinking about, well, who do those groups interact with? Who are the organizations which are facing that group of companies, and then working with them? Yeah.
Good, Len. You had a question as well, please, and welcome.
Thanks, Jakob, and hello, Stephen. Thanks very much for a very interesting conversation. My name is Len Kelleher. I'm based in Cambridge University in a small research centre that provides evidence for Research England specifically in terms of knowledge exchange, data and metrics. So I'm interested in coming at this from the point of view of the knowledge provider, I guess, for a second. So one thing you mentioned which caught my interest particularly was universities see these vouchers as a gateway to future work, which is tallies with what we see as well. What I'm interested in is from an evaluation perspective, how typically if there is an answer to this question, typically how long would a university expect to wait for something like that to happen, or more specifically, over what kind of time period would they measure? I guess would be the what I'm really after. Thanks.
Thanks, Lynn. I guess you're a colleague of Thomas Ulrichsen's, are you, at
I am
Cambridge?
indeed, yes.
Yes.
Yeah.
Thomas and I both work very closely together in the Innovation and Research Caucus, so know the centre there very well. So
fair enough.
Always very impressed with, of course, with the work that's done by Thomas and the team there. So it's a very difficult question because in some cases, a voucher type project will lead almost immediately to, a bigger and better idea, and that might be something which the university and the firm can develop together and seek support from a different public agency. At times, that'll be a kind of longer term sort of relationship, and it might be that in certain cases, particularly in contexts like the Irish context, where firms are allowed multiple innovation vouchers, that the firm goes through several iterations of innovation vouchers with a single higher education provider before it leads to a further project. Or in Scotland, where they're allowed to combine vouchers, it could be 2 or 3 SMEs that work together to get a super voucher so they can work with an HEI provider. So it can work all sorts of different ways. In our UK evidence suggests that when firms have had an innovation voucher at a regional level, and we were looking particularly at ones in Northern Ireland, then over the next 3 years, they're then more likely to get an Innovate UK grant. So to go from this regional innovation voucher to a national innovation grant. And so in that sense, there was a time delay, but it wasn't massively long.
Great, thank you.
Steve, there was a question from the floor and the chat. How do you determine the optimal amount of vouchers? I guess both in terms of the sum that the government provides, but then also the co-financing percentage to make sure that there's enough demand, but also that it doesn't create too much of a challenge to the administration of the voucher scheme. Of course, larger sums, and there may be stronger need for scrutiny of the applications. And how do you adjust it to the local economic context?
Yep. Okay. So it's almost universal that the most voucher schemes seem to start at a nominal value of around €5,000. Certainly across Northern Europe, that's a very strong sort of norm, or 5,000 sterling if you're UK based. What then happens is, you're absolutely right, there is considerable variability in terms of the amount of co-funding which smaller companies are required to add to that as part of their commitment to the voucher. It is a difficult one, because even in the UK context, where the firm was asked to add another 50% to the voucher, so 5,000 from the government, 5,000 sterling from the firm. There was quite a big dropout between the actual application of vouchers and the actual use of those vouchers. So many vouchers were awarded, but then not taken up. About a third of growth vouchers were in that space. So you have to think quite hard about what you think the different incentives are, and how able firms are to actually make that much funding contribution. And that may depend on the kind of size of companies that you're going for as your target group. If it's a smaller company, maybe you will go for a lower matching proportion. So I'm not sure there is a magic number, Jakob. The Danes have a significantly higher voucher value. It's 13,500, if I remember rightly, something like that in sterling terms. But then services in Denmark are so much more expensive than they would be in the UK or anywhere else. So it probably just about works out at about the same sort of time, I think.
And can one say that innovation vouchers on average are larger than growth vouchers?
I'm not sure I could say that with any degree of confidence, Jakob. I mean, both very often have a nominal 5,000 value.
Okay.
What has been happening more is that you've seen sort of mechanisms where the value of the individual voucher remains the same, but firms are either able to apply for multiple vouchers over a period of time, or firms can come together to combine the value of their vouchers in a sort of collaboration. So 2 or 3 firms could work together with a university, put their 15,000 in 3 times 5, and the university puts in the same. Sorry, the firms put in the same. So you get a project which is actually a €30,000 project in that case, or a 30,000 sterling project. So that's very often the way that firms get, or you can get around these. You can offer some flexibility around that sort of basic level of the voucher.
Right. Thanks, Steve. I just wanted to give one more time the opportunity for colleagues in Chisinau to comment or ask any questions. Not someone in Chisinau, but an ETIN member. John Michael, please.
Yes, hello, good afternoon, everyone. Well, million thanks, Professor Roper, for an interesting presentation. Very interesting topic. I'm Michael Zabala, University of Deusto in the Basque Country, in the northern part of Spain. And we've been in Basque Country using very extensively this type of instruments as well, to try to stimulate innovation at the level of SMEs and startups being done at the moment. And one of the questions that we are struggling with or thinking about would be which could be other potential innovation policy instruments that innovation vouchers could be combined with, because we see as well the benefits that you were referring to in your presentation. But we would like to stimulate innovation in a more continuous manner. We see with the type of SMEs that we have in the Basque Country that innovation vouchers are very effective for a certain period of time, but then they lose effectiveness. I would like to try to combine within the logic of a policy mix the innovation vouchers instruments to try to provide more continuity, but transferring that amount of funds that you were referring to as well in your intervention to all the types of innovation policy instruments that could provide a more continuous path for these SMEs to continue implementing and selling and reaching the market. So I don't know if you have any specific reflection on that based on your experience on which could be those more effective policy instruments that could be a very good fit, could represent a good fit with the vouchers? Thank you.
Yeah, it's genuinely a difficult question. I think always the sort of structure of these policy mixes. The UK has swung very heavily towards R&D tax credits, as you probably know, over the last few years, as have countries like Belgium. Other countries have remained very much focused on sort of direct support for innovation through grants. I think if you are trying to do this kind of cumulative capability building with companies and with partnerships, company to higher education partnerships, it's probably got to be something around direct support, where it's either a grant, a loan, a repayable grant, whatever mechanism you think you want to use, but you probably do need to have something which is targeted and can build on the previous relationship or knowledge that the company's built on. So I think that does limit a little bit the kind of set range of instruments that you might have. But I think we sort of underplay some of the sort of repayable incentives sometimes, which I always think are very interesting.
Yeah, million thanks. Thanks for your reflections.
Good. I see that Igor, our main counterpart in Chisinau, was able to reconnect. So I just wanted to give him a chance maybe to introduce himself and see if there were any comments or questions from him. Igor, are you able to hear us? Do you want to come in briefly?
Yes. Can you hear me?
Yes, we can hear you.
Sorry, I had some technical problems. My name is Igor Kiosa. I'm the acting head of Research Innovation Policy Department from the Ministry of Education and Research. And basically, our department is dealing with research and innovation policies at the national level. And as I discussed with colleagues Jakob and Emmanuel, innovation is one of the aspects that we need to work in our country. It's even mentioned in the European enlargement report that we still lagging behind, for example. So this is why it's very important for us to have this kind of discussions and your suggestion, good examples of how we better implement the innovation vouchers and also other instruments. Last month in March, we launched the National Innovation Fund for Research and National Fund for Research and Innovation, and it's at the beginning, and we believe that it will be a success also with the help of expertise from UNECE and colleagues, because even in our European integration process, we need to hurry up on catching the innovation side, which is very important, as you know, at the European level.
Thanks a lot, Igor. I'll take one last question from Sevak, from an expert from Armenia, and then we'll do the game segment and close hopefully on time. Sevak, please.
Thank you for this opportunity. Thank you, Jakob and team. That was really nice to hear this discussion. Actually, we are working on entrepreneurship strategy in Armenia, and also we have been working on the high-tech support law for the government. Recent World Bank report is stating that it was about middle income trap. So the report is referring to the countries which are in the upper middle income group. And they find out that innovation support was not very effective in those countries, especially among SMEs, because they were not capable to capture, to utilize the value of the innovation. And they were suggesting to focus in the beginning more on investment support to scale up the businesses, and then to move to the innovation support schemes. So in this context, my question is, if you have some evidence from this evaluation reports, does the matter of companies, does the size of companies matter in using this innovation vouchers or innovation grants? Thank you.
I think company size does matter a considerable amount here, but perhaps equally important is the nature of the partners that those companies are working with, because I think that you need to have a partnership at both ends, the company that can use the knowledge that they gain from the higher education provider or whoever else it is, and also the knowledge provider that can communicate effectively with the business. So I think it's not just about the company, it's also about the knowledge provider, which is also important. But I sympathize with your point very much. I think the way that the innovation support network in the UK is working is increasingly to see innovation support as part of a sort of more holistic support package, which is being provided to companies, where the technology, the innovation support is certainly provided, but that is provided alongside access to, could be business advice, could be exporting advice, could be capability building of some other sort, to ensure that the innovation is then commercialized and exploited effectively. So I do think you need to think around innovation vouchers not in isolation, but within that more systemic support context, and reflecting the kind of notion of the policy mix that we were talking about previously.
Thank you.
Good. Colleagues, thank you all for your interesting questions and comments. So I think we can all agree that Steve is extremely knowledgeable and interesting to talk to, but let's find out a little bit more about his private life. So we're now doing the infamous game segment, and I will put on the screen, hope it's visible, 3 statements about Stephen, and only one of them is true. So does Stephen, when he's not working, restore classic cars? Does he have a metal knee? Or was he taught by a Nobel Prize winner during his times as a student at university? Emanuela will now put up the poll. Stephen, you're not allowed to vote, of course.
No, well, I know the answer, Jakob.
That would be fraud if you voted. So we'll give you a few seconds to choose which option you think is true. And then we look forward to Stephen telling us the truth and elaborating a little bit on that part of his life, or that part of his body, in case it is we're talking about a metal knee. So, Emanuela, how many more? Do we have a good response rate already?
Yeah, the responses are coming in. For now, the first statement is most popular, or seems to be true by the majority.
Should I close the slide or leave it up a bit longer?
I think you can leave it up a bit longer.
Good.
I think we have a winner. So it seems that 45% of participants think that the first statement is true.
So almost everyone, almost half of the participants think is statement number 1, which when Stephen sent me his 3 statements, I thought was not true, because he would have talked to me about it during our dinners and drinks in Montenegro when we were working on a voucher scheme there. But maybe it is the truth. Steve, please enlighten us.
So I'm afraid, folks, 1 is not true. When I'm not working, I'm usually in my pottery studio at home. So I'm a closet potter rather than a classic car restorer. The second one is true. I had a cycling accident about 20 years ago. So my right knee is largely metal rather than the bone it should be. And the third one is nearly true. not quite. But I did my PhD and postgrad at Oxford and LSE and was taught by Chris Pissarides and Jim Merles. So I was actually taught by 2 Nobel Prize winners rather than 1. So, you know, it's just for a little bit of fun.
Well done, Steve. Great options and great insights. Good. So I'll hand over to Anders for a short closing. And before I do that, I want to thank you all again for joining, especially our colleagues in Chisinau, but also our ETN members and Steve. Oh, was there a hand that just went up? No, it went down. Okay. And Steve, yeah, great to reconnect, and hopefully we'll work together more in the near future. Anders, over to you.
Well, thank you very much, Stephen, and to everyone who participated. It's been a very interesting discussion. And I think it might be something that if Igor and colleagues from Moldova are interested, we could follow up with, because we're planning another capacity building event in this format, where we maybe could look more into detail things like what's the link with venture capital, how do you measure the spillovers, how do you evaluate the effect of voucher schemes, and what's going on already in Moldova, and how is that working? So that's just a suggestion. And I would also very much like to stress that we are in discussions with the government of Sweden for a potential follow-up project and engagement on what we can do specifically for Moldova on this topic and also another topic. And ideas are very welcome at this stage. And of course, also your support in noting to the government of Sweden that this is important and valuable to you. And I would also like to invite everyone here to join ETN and to keep a lookout for other Innovation Circle episodes that we are planning in this format over the next couple of months. And it's definitely something that we would like to sustain and do regularly on a bi-monthly basis as we go along. And we welcome any ideas for interesting guests or interesting topics. So thank you very much to everyone again, and I look forward to seeing many of you again.
Thank you.
Thank you.
Bye-bye.
Thank you.